or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen.
Yeah, welcome to another episode of Cycles TV. Thanks for joining me today, and I'm back from longer travel during the past week, so therefore I need to excuse that we didn't have the chance to have this live session last week, but I'm back now. I was around the globe on a different area of this planet here, which was quite exhausting and interesting at the same time. But now I'm back to normal schedule. Let's review some cycle charts here. And today, as announced, I want to review with you another perspective in Europe. So as we're mainly looking into the US, but it's not quite so many news in the US. Let's have a look at the German DAX, Deutscher Aktienindex, German Stock Market Index, which is the main index which is tracked here in Germany. So one big market for Europe. So if we have a look at the stock market so far, we can see that the German Aktienindex or German stock market did a nice up run here in 2024 and even 2025. It even accelerated here at a very high pace. So it even outperformed the US. By the way, that's interesting to announce. We've seen a lot of markets recently outperforming the broader US markets. And I already introduced in my last session that it would be more important now to have a look at specific sectors instead of the broad US markets. And in that similar fashion, you should also have a look at different European, international, Asian stock markets around the globe, which might have more interesting opportunities regarding cycles. So for today, for my European friends, for my German friends out there, let's review the German stock market, the Deutschen Aktienindex. All right, let's jump to the cycles perspective here. So what we review first here at the bottom is the cycles spectrum. So you see here the cycle spectrum is shown at the bottom. And by reading the cycle spectrum, we try to get an idea about which cycles are the most important, most dominant ones, which might guide us here, helping to see a kind of forward projection in regards to what to expect next. What we have here at the bottom is a kind of usual spectrum. So it's not a perfect spectrum due to the fact that there are a lot of peaks here in that spectrum. So it's not as easy to read. So therefore, let me walk you through the main procedure on how to read a cycle spectrum, here in that case, German stock market index. Okay? So you would probably find the most dominant one by looking at the amplitude axis first. So this axis here gives us the scale about the amplitude of a given cycle. And a given cycle is found by detecting a peak in the spectrum. So we have the highest amplitude influence at that specific cycle length, which is shown here on the x-axis. So where that top crosses here. So this is how you derive the dominant cycle from that spectrum here. So the highest amplitude, so the peak of the amplitude at a given cycle length, which is exactly the point here with the blue marked dot. So this gives us a dominant cycle length of 248 trading days. So this chart is plotted in trading days, 248 trading days at that point. This is, it's not the picture perfect, but we have to the right side a separation. In the ideal world, that right shoulder would even go down close to the zero line here, which is not the case. So this seems to be also a longer cycle, which we cannot measure in yearly days here. So maybe on the weekly chart, there might be a larger cycle. But coming from a daily perspective, this is the longest one here, which has a separation to the right and has also a nice separation to the left. And there's no other cycle with this height here in the spectrum. Yeah, so all other cycles end at this amplitude maximum here. So there's quite a huge offset if we look at that cycle. From our ranking mechanism, we also find this cycle here ranked as a dominant one. I mean, it's place 3, so it's not the most prominent one. But in addition to that, it's also from how the shape can be seen, one of a very important dominant cycle. Franz, I see your point. I will come back to that in a second. So we are live. Feel free to drop in your questions. Thanks, Franz, for doing that. So that's the most obvious one here, which should be seen. So we have a good ranking. We have a nice amplitude separation here. And if you just have a look here at the scale from the length, don't have a look at the color here, but Franz mentioned already one very important aspect here. So 248, I would count this is, and it is sorted by strength. Yeah, so this is the most important one coming from strength if you go to the longer term cycles. So this is the longest cycle. The other one, the shortest one, is on here 8 here. And if you ignore all the shorter ones here, about 30, 20, 30, 40 days, which I would count quite too short. So they are in the range here to the lower left, yeah, in that spectrum. You could totally ignore them, but because they are just too many, you cannot separate them. The next one which comes into play then is the one with so 88 or 248, and 248 is quite much longer, with a high strength value. So I would count this for the most important cycle here in that case. So I would go with that first. And by the way, as I always recommend, a quick observation about the key turning points in price action, if they are in alignment with those theoretical cycle turns. This is what I always recommend. Just do a kind of zigzag connection between the timing points when this top is here and then the bottom here. So just connecting those. So then here's kind of top, so a sideways movement to here, then the move into the low here. Here the top. I mean, not the perfect one, but here again, I think I can count this. We have this key top here, this point, somewhere here, then low, this point, now moving up. So you see a nice observation, which I would like to comment also here, is sometimes those swings here, so in that case we have a huge upswing in that cycle, just resulted in a sideways movement until here. And then when the next downswing started, the next downswing phase here. So this gives you an idea about the previous sideways to downswing projection was stopped here with an upswing in the cycle and a sideways movement in the market. So sideways movement, and the same here to the downside. So here started another downswing cycle, which just stopped the upswing. Now we had a huge upswing. Then this upswing was stopped exactly at that point in time here when the cycle turned down, as we had a huge upswing. That downswing cycle just resulted in a sideways movement of the market. So from a cyclic perspective, that's also true. Yeah, so that downswing cycle here stopped the strong upswing trend in the market. So this is how you need to read those swings. Those turning points here are changes in trend. And if an uptrend changes into a sideways consolidation, it's also in alignment with the downswing cycle. Because just remember, cycles are a detrended view to the market. Okay, but that said up front, if you now see where we are in that cycle, it's pretty clear why I selected for today's update exactly this example here, because we can now see that 248 trading day cycle comes to an important window now in early March. So the next 2 weeks are exactly the point in time when we could expect this upswing, strong upswing cycle coming to an end. And as I've shown in previous examples, this does not mean that we now might see a downward or strong downward movement. This could also lead to a sideways consolidation now into summer, but at least maybe we should see the stop of the strong uptrend we have seen here for the second half of 2024, moving into early 2025. This just that stronger cycle here. So we could also now add the other cycles here up, which is, if we go down from length here, the next one would be 194, which is seen here in the spectrum. So the next cycle peak, just going from the spectrum and coming from the longest cycle to the shortest, is 194. It's also a dominant cycle, which our ranking mechanism identified. So using 194 to the mix in the composite will not alter the change. So this is a second important observation here. If we just see now the composite chart of both cycles here, I deactivate the 194-day cycle. We have the top a little bit more shifted to the right into the future if we add the 194. So we don't have a complete change of that composite forecast, which is important. So they are more or less in alignment. Those cycles are in alignment in regards to their outlook. Both cycles suggest we are at an important uptrend. So I can also take the longer term cycle off. So this 194-day cycle has already peaked end of January. And if you add both together, they seem to peak right now. So now the shorter one has just peaked in January, February. The slightly longer cycle will peak early March. So they are both, just using the composite of both, in a topping configuration right now. We could even go further. So the next cycle, which would align for an a load cycle to pick, is 131 days, which is the next, which is showing up here. It's also highlighted as the fifth dominant cycle here, coming from that perspective. And if we add this to the mix, so now we have a composite here out of those three cycles, and you see it has the same configuration. So just using the 131 cycle, it has almost peaked at the same time as the 194. So if we would add the 194, the 131, you see both have the same, more or less topping at the same point in time. So completely different cycles, now topping at the same time. So they really form a cluster now of topping cycles. And I hope you got the message for today. This is another cluster here. And let's add the next cycle in this sequence would be this one here, 88 days. Which is seen here as a clear peak in the spectrum. It is shown as second ranked cycle with 88, and we could add this to the mix. And now you see how those four cycles form a very sharp composite peak here in that situation. And that's also the reason why I picked that example for today. So we have a real cluster of four dominant cycles, which are peaking now between end of January, beginning of March in the German stock market, Deutsche Aktienindex. So that on the one hand, you see how that accelerated those upswing here. So it could be a good argument why we've seen this uprun here when since December those four cycles have synced up into their upswing. But now we need to be careful as mid-February, now early March, those four cycles as an aggregated view changed now into their downswing phase. So we really need to be careful from a timing perspective, from the cyclic timing perspective. This is more an indication that we could see now the change in trend here, similar to as we've seen in this major low here. So these are then the major changes in trend here at that point in time when we see those four cycles have aligned in a low forming. This was a major low for years to come. And even here, we had a similar bottom here at this period and maybe here at this period. And here it was the key top for years to come. So when those cycles align, and especially in those major situations, I think at least it's time to look out. It's really time to look out now what the technicals are doing here. I mean, you know how we're working with that. If we now add technical indicators to that view, one of the most important one is the relative strength index, which we have integrated here into our platform using the current active dominant cycle with a length of 88. So this is the shorted one, ranked number 2. You see this in the upper left. So this is the length setting for that cyclic smoothed RSI. You see clearly the configuration here. So it's almost generating a sell signal just from the technical perspective. So just as pure technical reading of those technical indicator here, where the signal line is crossing now the upper band to the downside, which would indicate a theoretical sell signal here reading that technical indicator. So everything is in place just from the configuration of timing, 4 major cycles lining up, in addition to the technical condition, which also suggests we are very, very overbought in that market, which could also trigger a possible correction from the technical condition. Yeah, that's the quick one. I mean, that's the quick analysis of the German stock market using the major cycles, adding technicals to the mix. This is how we do cycle analysis here at the foundation. So the tool sets I'm outlining here are available for all our members. And this episode is mainly designed to give you also an understanding of how to apply those tools. So this is not a technical tool or a special tool which just I'm using. All members are using that, and we just try to explain how to read a spectrum, which cycles to pick. And I will now come to an observation which, Franz, you shared already in the chat section, and thanks for sharing that observation. So what you mentioned is we see a pretty red cycle spectrum. And to outline that, what Franz Huber is highlighting here is if you have a look to the color coding of the cycles which are listed here. And by the way, this is just a list of all peaks which are seen here in individual peaks in the spectrum. So it's just a table view of the same information, and the color coding indicates at which phase those cycles are. So, and if I'm talking about phase, it just means if the cycle is in an upswing or in a downswing phase, or currently changing its trend. And you see that almost all cycles, and it doesn't matter which length you pick, all cycles show a pretty red phasing color, which means almost all cycles have rolled over to their negative phase. All cycles are pointing downward. So, for example, you could pick all cycles, and you see how that cluster here stands out in that composite wave. So we have a huge peak, which means possible all cycles seem to have peaked end of February, and are now all in their downward phase until late March. So the period of March has a very negative cyclic picture, counting all possible cycles, or taking all possible cycles into account. So that's 20 minutes, We try to keep it quite short and to the point. So this was 20 minutes analyzing different stock market on our planet. So as I have visited different places on our planet last week, at least changing from the US perspective to an European perspective, and analyzing a stock market in Europe, like analyzing a sector in the US markets, is, I think, a key theme if we look into 2025. So I don't think that the broader US stock markets might give us a clue in terms of cycle analysis. due to the fact that we have high uncertainty how the US will position themselves in specific areas. Therefore, it's more important to analyze the individual sectors. And as the US is slightly aggressive or interesting in regards to their geopolitical situation compared to other global areas, it's also important to analyze cycles in other different global regions on this earth. And that could be quite more promising than just looking at the US markets alone. I hope you got an idea about how to read the US stock markets. Maybe let's check some other questions. So Tony, you had an interesting question showing up. In the spectrum, we have green peaks and blue peaks. Normally, I only work with green peaks. In cases where we only see blue peaks on a chart, is it recommended to use the blue peaks? Yeah, let's bring back the chart here. I will remove your question so that we can see the color coding. So Tony is referring here to the color at those triangles here. You see these little triangles, and these triangles are colored green, blue, or red. And the best triangles we would like to look out are green triangles, and the color coding of those triangles refers to the Bartels score. So the better the Bartels score, the more green the triangle will look like. A neutral Bartels score will show you a blue triangle, and a very low and bad Bartels score will show us a red triangle. So preferred are green ones, but blue ones are as okay to select them. So blue just means the statistical significance is not high enough to confirm that cyclic measurement. But this does not mean that cycle is not there. So I have learned during the past years that I more and more shy away from a single Bartels perspective, as cycles are not as constant as static anyhow. So the statistical significance will be higher if you have a more static cycle in the market, so without high variation of phasing and length. So the more static the cycle, the higher the Bartels statistical significance will be. But to be honest, in reality, we will never see theoretic perfect static cycles. So for long-term past analysis of long-term historical data sets, it might be useful to use the Bartels score, because it will help on longer data sets in having lots of historical data. But if we are more interested in forecasting, so finding the cycle which is most important in regards to looking into the future, statistical significance often will not help us, or it might even be counter helpful. Often it might block us, because the cycle might have been perfect over a long period of time in the past, which will give it a high statistical significance. However, if that cycle is now currently going out of importance, or the dominance of that cycle is reduced in the current point of time, it will have less impact on the future. But the Bartels score will not show you that. So you might get tricked too much relying on statistical significance instead of just looking at the current dominant rhythm, the current dominant cyclic situation, by not taking account too much data, by not taking account too much importance on the Bartels or statistical significance, because we can better rely on the dynamics. But said that, and getting back to your questions, Tony, that's why it's absolutely valid and okay to use blue triangles. I mean, green triangles, you have confirmation from the cyclic perspective and the statistical perspective. If you just have blue, you have only confirmation from the cyclical analysis and not so much from the statistical. But blue does not mean it has a bad statistical significance. Blue just means it's kind of neutral. Yeah, the statistical test will not give you any clue if it is really relevant from that statistical perspective or not. Maybe avoid the red ones, yeah, so which have a bad statistical correlation or significance. But blue and green are both valuable and useful, and don't overjudge the Bartels score. Maybe what's more important, and to get back to your question, as we are here in regards to learning, if we talk about the market dynamics, I would use a different measurement, which we have also embedded here, which is the cycle highlighter, which we could activate by this kind of window here. So let's make this bigger first. And now you see at the bottom window, you see the selected cycle with the length of 194, which is shown here at the top, which is not so important, but it's the same as the red curve here at the bottom. Now compared to the light blue dotted line here, which is only the price behavior with a cyclic length of 194 days. So you see the cyclic price behavior to that rhythm compared and overlaid to the theoretical cycle. And now you can see the variation between what happened in the price, which is the blue cyclic behavior of the price chart, and a perfect theoretical cycle of the same length, which is the red one. And if you see that the blue line tops at the point where the red cycle tops, which means you have a low variation. Yeah, same here for the low. So you have a low variation of the phase at this point, at this point, and at this point. Here during that cycle, we have been completely off. But then again, here we have a low and a top, and again here a low. So this cycle has very low variation in regards to phase shifts, just besides one repetition. But otherwise, we have 1, 2, 3, 4, 5, 6 repetitions. 1 out of 6 repetitions had a bad variation. All other 5 repetitions have a nice in sync behavior between price action and theoretical price. So this cycle highlighter gives you a much better representation, which is not statistical significance, but it gives you a visual representation of the variation of that cycle. We could do the same for 131 here. So here again, here we see the 131 days cycle again. Oh, I need to do the same. So we see here the 132 cycle, which is here the same. So, and we can see also spot the variation of that cycle in regards to past behavior. Yeah, so here we have top, low, top, top, low, top, low, top. So again, we just have one situation where this cycle was out of sync here in that period, and the other have been in sync. So, and that's why I'm putting this to the show here, because I think that kind of cycle highlighter, which is embedded, you can activate via a click here, is much more important to identify the variation of a cycle by comparing the blue line and the red one. If it's almost correlates each other, then you have a perfect cycle without any variation, which is what we're all looking for. But reality is always different, so you need to accept a little bit of variation. And this cycle highlighter can, from a visual perspective, show you the variation in phase and the variation in amplitude. And that's much more helpful than just relying on statistical significance. Yeah. maybe, Elliot, maybe to end today's show with that topic. I mean, on the US markets, I a lot of times I did analysis on the US indices even at end of 2024, and it's still valid. The long-term cycle topped at the end of 2024. Since then, the stock markets more or less moved sideways. The US stock markets moved sideways. Long-term perspective, yeah, for sure. We had short-term swings, but if you look at the end of 2024, we hit more or less the ceiling, and since then we have gone sideways, which is, and I've told you also this in the German DAX today, if a long-term trend is stopped by a downswing, which is now then impacting the market into a sideways situation, we are in that downswing cycle. So yes, the US, the main US, the broader US indices are from their long-term cyclic perspective now in their downswing phase. How that way down would look like, that's not easy to tell. And I think therefore this will be different in individual sectors. Last comment on Bitcoin. I mean, right now there is a correlation between Bitcoin and the tech index, but I think who tells you that this correlation will last forever? I mean, nobody tells you that this correlation will stay there now forever. It's just during the past months, we had a high correlation between Bitcoin and the tech stocks, but this does not give you any clue for the future. And that's why I think it makes sense to also look at Bitcoin from a different perspective. So if stock markets might go down, Bitcoin might be seen as a different asset class, which could decouple then from if stocks drop. I mean, we have this huge overvaluation of US stocks where Bitcoin is a different class of assets. Yeah, I know. My Bitcoin analysis is still valid. I know we are currently in a downward correction, which should come to an end, and April should be positive. But I would make this a separate session so that next week we can also have the crypto update. Back again. For now and for today, I would leave it as a view on the German Aktienindex with some additional comments and questions answered. So I hope you liked today. I'm now back at my regular working schedule, so you now can also expect me to get regular Cycles TV shows out there. So thanks for joining me today. Please leave me a comment, and please join me last week, same time, same place, and have a safe week. See you.